Good morning, everybody. Welcome to My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. So, as always, we're going to focus on the charts. No BS, no nonsense. Let's tell it how it is. And that, again, is what verified investing is all about. So, what are we seeing today? We had the PPI data coming out this morning. PPI data coming in better than expected, meaning lower inflation. Now, again, are these real numbers? Are they going to be revised later on? We don't know. All we know as consumers is what we see when we go out and consume or purchase things. But according to these numbers, the producer price index, which is inflation on the producer side or the wholesale side, came in at minus 0.1% versus the expected plus 3%, both on headline and on core. Now, again, markets love that. Why? Because this is a recipe for extra Fed rate cuts. Now, again, right now, markets are only still pricing in 3 rate cuts until the end of the year. But think about this. Yesterday, we got a revision down for the last year on jobs of 911,000 jobs. All right. So we talked about this in yesterday's My Trading Game Plan, how the data was going to come out at 10 o'clock and we didn't know if it would be significant. Markets honestly totally ignored it. They continued to kind of float all day long. But it was a revision down, meaning almost 1 million less jobs. Now, if you're a conspiracy theorist out there, 911,000 jobs, 911, dial 911 for the economy, maybe. But in one factor, does it actually push the Fed to cut rates? And then we get a good inflation number today. The answer is yes. So again, the Fed basically has a runway with all green lights to cut rates in September. And that meeting is next Wednesday. Again, 2 p.m. we'll get that first rate cut. All right. So what else is going on? Oracle earnings. We're going to discuss this in just a little bit. We'll look at the chart. But again, folks, if I look at Oracle's move, almost unheard of. In fact, it's the biggest move since 1999. 1999, I was actually investing in trading. It was the beginning of my trading career. And that was the last time Oracle made a move like this up on the back of earnings. Now, what's amazing about that is that 1999 was just getting towards the top of the internet bubble, the dot-com bubble, before it collapsed. Could we be in the same scenario here with AI stocks, especially when a company valued at about 700 million is up 30% on earnings? I think there's something there. Now, in addition, before we get into the charts, I have to just point this out. This is the lunacy of the market right now. The lunacy of the market is this, is that Oracle missed on earnings, missed on revenue, but they said, guys, don't worry about that. Don't worry about that because we have such a big backlog. Guys, oh, it's coming. It's coming. It's coming. And the markets are believing them. Now, again, if you look historically, when companies say they have these big backlogs, a lot of companies in AI are double and triple ordering because they know that if they need those parts later on, those AI tools or whatever it may be, then they can't get them because there's a backlog, right? So a lot of times companies will order 3 times as much as they need just in case they need it and then cancel those orders. But the markets are willing in this environment to look beyond it and say, we'll give it the benefit of the doubt. We'll trust them, even though they missed earnings and missed revenue. We're going to believe them that they have this huge backlog that will eventually come. And analysts are buying into it hook, line, and sinker with upgrades this morning, price targets going up sky high, all of these type of things. All right. So let's get into the data and the charts, guys. All right. So let's take a look right here. All right. So first and foremost, what I want to do is bring up my chart and take a look at where the futures are. So again, if we take a look at the chart, we can see that this was your PPI data release. Markets were trending up into that on the back of Oracle earnings. And again, you got a nice pop there. It's fading a little bit. Now, the one thing I want to point out here is on Friday last week, we had this great news on jobs, right? It was just kind of a Goldilocks jobs number. Weaker jobs, but not negative. All of a sudden, it's like, okay, Fed can cut rates. Markets were gapping up, and we saw institutional selling. Now, the last 2 days, institutions have gone silent. No sign of major selling. Today at the open, let's watch closely for the first hour. And the reason I say that is because you're going to get volume this morning. PPI data and Oracle earnings are getting the retail crowd super excited. And the question will be, is do we see that institutional sell side action coming out of the woodwork? All right. And again, maybe we don't, but these are things as a technician I need to be paying attention to. All right, back to the charts we go. So again, S&P futures are up. We're looking to open up about 30 points higher or so on the S&P to start the day. And if we flip over to the S&P 500 itself, the daily chart, what we have is us still remaining within this tightening wedge pattern. And again, we have our support level here on the S&P around 64.75, and resistance is up at that same trend line above at around 65.85. So again, very interesting. If where we're opening today, we will not be at the high end of that. So we won't be touching, based on where we're opening, the high end of the resistance. But let's see if throughout the day do we push up into that. If we do, the idea is you should see a pullback per past history. This line has been an intricate line for the market to either bounce off of back in 2023 to 2024. And then once it broke below, it has proven to be resistance for at least small pullbacks. We'll see again if it pulls back, if it gets up to that. Now, here's your level on the QQQ. The NASDAQ 100 ETF, the QQQ, currently, again, we're going to open around 583.33. That will be right around the all-time high on the QQQ on the back of Oracle. Now, again, support will remain down here. If we start to dump, keep an eye out. And I don't think we'd get down there today by any chance, even if we had a massive sell. It's too far down. But in the coming days or weeks, we want to watch this 564 to 565 trend line. And then look at this, guys. This is something that I just came up with here. Take a look at the trend line. If we take the former all-time high right here, this was our former all-time high from February before we had this latest move up. If we take that and we connect it to our highs, that line is virtually parallel to this lower line. And I just found this morning, and this is what I love about technical analysis, is you start looking at charts more and more, and you find new keys. And the reason why that's important is that if you have a parallel, parallels basically confirm that your other trend line is correct. And the reason I say that is because it wouldn't be parallel. Like, there's something psychologically in depth in the market from investors that is creating this natural parallel to occur. And that means that we have something here in the charts where if we rally up on the QQQ, 591 is going to be big resistance. That's about 11 points higher than where we are now. Well, actually 8 points higher from where we're going to open up from yesterday's close, 11 points. And then our downside level. So this is now my new level to watch. In fact, let me add in some arrows so we can really solidify this as being significant. And we'll watch up here if we push up into this level. The dollar today, not doing much. So the dollar's pretty much ignoring the PPI news. Now, again, part of me wonders if the dollar and the yields, if they kind of know whether or not those numbers are legit or are they one-offs or whatnot on the PPI. But again, those type of numbers, when it comes in that obscure and almost that perfect to fit the puzzle that would allow the Fed to do lots of rate cuts sooner than later. I think we're all at that point, especially when you see a 911,911 revision on the jobs data from the last year down. And listen, the market's basically, because it's in history, like a lot of people were surprised that revision down didn't shock the markets. Number one, it adds credence to the Fed cutting rates, which is what the market wants, right? The number two is it's in the past. So it's already passed. The markets are already through that. The markets are always forward looking. And so we have to remember that. And so that's one of the reasons why. But ultimately, does it clear the path for the Fed to cut? Does the PPI today can clear the path to cut? Absolutely it does. All right. So the dollar's ignoring it. Whether the dollar knows something that all of us don't, we don't know. The 10-year yield today is moving back down a little bit. But look, it's still dancing around this key trend line of support, trading around 4.05%. So we are seeing the 10-year yield come in. All right, let's flip over to Oracle here. Oracle is up over 30% on earnings. $700 billion company, up 30% today. It might be the next $1 trillion company here on the big board. All right. So again, could it be joining? It might, maybe even today, based on this move up. Now, as a technical trader, what am I going to do here? I'm going to short the heck out of it at the open. And the reason I say that is because what have been the big companies that have gapped up ridiculously in the last couple weeks? We had Broadcom last week, right? And if we go to the Broadcom chart, AVGO is the symbol on that. That had a gap up of about 15% on the daily chart here. And look at what it did the entire day. All right. Then we had Microsoft. Microsoft gapped up here. What did it do that day on earnings? It fell straight down. Now, I'm not saying that Oracle will fall down. I'm saying that probability wise, this is now the biggest move that we have seen on any of these mega caps. All right. Microsoft was up like 9% on earnings, I think. AVGO was up 15%. Oracle is up 32% now. So the idea is that this is even more outside moved. At least as a day trader, there's an opportunity here to get me a pullback, okay, at the open. Now, again, as a day trader, I want to be crystal clear on this. Do I think it's going to pull back all day like Broadcom, or like is it going to pull back for a full month like Microsoft did after earnings? And the answer is, frankly, I don't care, right? The idea of a trader is to say, okay, at some point from these levels of 322, where it's at right now, wherever it's at, you will get something like a $5 or $10 pullback. And that would be more than enough. As a trader, boom, boom, out onto the next thing, right? Just like I'm doing even as a quick kind of swing trade moves on GDX. And by the way, I did exit GDX yesterday. If you did see that My Trading Game Plan yesterday, we had this great pullback, great pullback from where it opened, came right in. I took my money. I said, thank you very much. It's one of the nice things about having big positions on high conviction plays is that you don't need 10% to make a boatload of money. All right, back to the charts we go here. So you can see again, we are at 321.56 on Oracle. And again, the one thing I would say, and this is I'm going to give you my target for the next couple weeks of where I think Oracle's going to go. I think it's going to pull back to 275. Now, why? Well, because 275, see this upsloping trend line. And in fact, this upsloping trend line even goes further, right? So you can even continue this out and it kind of goes all the way back here. I mean, pretty cool. But the idea is that you're going to be gapping above this level now it's at 322. And my guess is you pull back to that. That should now become technical support. But again, that would be your estimation of where it would come back to before it finds some technical support. And again, I'm very curious to see if institutions start just banking money on this move. All right, next up, let's go to GameStop. GameStop, look at this beautiful long-term trend line on GameStop, by the way, trading just above it going into earnings. The company is up on earnings, not a huge move, but based on how the markets are, don't be surprised if this starts to run even higher. I even wouldn't be surprised if we fill this mega-sized gap right here at 28.50. All right, now listen, I don't think it necessarily will go there today, but gaps like this are made to be filled. All right. Technically speaking, gaps, if you look at all the gaps in a chart, about 85% of them are filled. It's very rare you don't fill a gap. And so the idea is that you might get one of those short squeezes on GameStop as maybe Roaring Kitty starts talking about it again. This is the environment where he will come out from under the rock and start chattering about GameStop because the environment is so bullish that so many of these smaller companies are going nuts. And speaking of which, we got to talk about what I talked about yesterday. So remember yesterday we were talking about these small micro caps that are being like, oh, we're going to buy some Bitcoin or ETH, or yesterday it was Chainlink that they bought. And all of a sudden their stock goes up like 3,000% in one day. Well, guess what? Yesterday afternoon, there was another one that did it. I mean, this is incredible, folks. And by the way, this should make you nervous when you see this type of behavior, because it is the mark. Historically, 1999 to 2000, we just talked about it with Oracle. These are the signals that tell us we are near the end. Even in 2021, I mean, you saw these type of crazy moves in microcaps, in crypto and stuff like that. And we know what happened after that into 2022's bear markets. But, you know, again, yesterday I brought up Bitmine Immersion, which again this is the first one to do this move. Had a 3,500% move in basically 5 trading days. It obviously collapsed back down. 2 days ago was Octo, or maybe this was yesterday even, actually. Maybe this was yesterday morning. But either way, you know, again, what we see here on this chart is from the close the previous day. Oh, this is the weekly, so that's why. I was going to say it's a couple days ago. But anyways, from the daily chart, in one day, 5,600% move. Yesterday morning, I highlighted CWD when they announced they were going to buy Chainlink and make that their big score or big kind of financial bet. And then what did this do? It gapped up and went up 2,400%. And then yesterday afternoon, look at this one. This is QMMM Holdings, and it did the same thing, said it was going to buy some Solana, some Bitcoin, and some ETH, and the stock goes up 2,700%. But look at where it's trading pre-market. It's all the way back to $74 a share after hitting $305 yesterday. So be careful. Listen, if you can find one of these ahead of time, more power to you. There's probably 1,000% return in it for you. But again, be very careful because when the rug gets pulled from these, they drop massively, aka in one day from 305 down to 74. And my guess is it goes ultimately lower. It'll bounce around, but my guess is it goes lower. Wild stuff, guys. I mean, this market, and this is why I believe we are in a bubble, not just an AI bubble because of Oracle and some of the other things. But when you see this type of craziness historically in 99 to 2000, 2007 into 2008, and in other periods inclusive of 2021, very, very much a signal of irrational exuberance, as Greenspan coined back in the mid to late 90s. All right, on to a couple other things here, guys. Let's take a look. Nvidia today is going to open higher on the Oracle news. Basically, Oracle news is making all the AI stocks or chip stocks rally today. It's not a huge move up, and we're not back to the all-time highs, but it is a little bit of a gap up. Trading wise, I'll be looking to short it if we get up to 180 and change. There's a gap fill right up here on Nvidia. All right, let's flip over to the commodity complex. All right, here we are with gold, guys. Gold put in a daily topping tail. All right, so it's official. And it doesn't matter what I think, right? It's what the charts are telling us. So the charts, that candle on on gold fits to a T the definition of a daily topping tail. Now, listen, it doesn't mean gold's not going further up later on, like let's say in a week or a month or whenever. I'm a huge mid to long-term bull on gold. But on a basis, this candle, it pushed up new all-time highs. By the way, hit this trend line I showed you yesterday, reversed and closed at its lows. That is a daily topping tail. Now, today you're getting a little bit of a bounce on gold. You're getting kind of what we call a retrace of the topping tail. That's very, very common with topping tails. The question is, as long as you don't have a daily close above the high of the topping tail, which is around 36.75 on my chart on gold, then that candle is dominant. All right, that candle is the dominant force until proven otherwise. And again, if you're looking for where the pullback could take you, basically back to 3,500, former major pivot high now becomes technical support, and that would be your spot. And as I mentioned, GDX yesterday, guys, beautiful sell-off. It's up a little bit today, getting a small bounce. I may look to re-short this. We'll have to see. I might wait for a $68 pierce if it can get above there, considering the bullishness in the markets today. Take a look at silver here real quick. Silver again inching up. Silver continues to struggle. And again, if you just put apples next to apples and you put gold next to silver, now granted, they're not quite the same. One's a pure store of value, while silver is more of a store/industrial metal. But gold had been going straight up. Silver had been going sideways. Now it's still holding the breakout zone, right? $40 to $39 is a very good area of support. But needless to say, if you're a bull on silver, this hasn't been the price action that you've wanted, considering you had a breakout. So we have to just watch this. Let's just take it one day at a time. Of course, I'll update you guys in these My Trading game plans. Let's look at oil. Oil inching up for the third day in a row. But look at how tiny these little moves are up, considering the 3-day drop we had over here. That continues to be what we would call a potential start of a bear flag. We'll watch to see if it starts to roll over. And then natural gas, and then we'll get into crypto here. Nat gas, folks, is trading again down just slightly. And if we just do a quick little trend line here, this is actually some interesting levels right here on nat gas. This is the Pepperstone. I usually don't look at the Pepperstone chart, but nonetheless, you can still see it's kind of dealing with this general zone. It also broke back above this zone here, which is kind of stuck. In other words, I would say nat gas remains stuck. Like I said before, guys, if it gets up to 350s or so, 350 or so, I would consider a short on that. But right now, it is a no touch. All right, let's flip over to Bitcoin. Can Bitcoin break above this trend line? We talked about how the chart technicals were slightly bullish. You had like a little inverse head and shoulders here. Yesterday, it tried to break out again and failed again. Today, it is pushing above. Can it do it? The little engine that could, or the big engine in the case of Bitcoin's market cap, maybe finally today we'll get a close back above. But what I love about this trend line is it's really shown us how important that level has been. Now, the more you hit on a level, the weaker it becomes, no doubt about it. But again, let's watch to see, can we close above? If we do, we should go back to about 117,000. That would be your resistance. And then lastly, ETH, guys. ETH has just been going to sleep here. It is still below this white trend line, but weirdly enough, it has not confirmed. It has not confirmed a breakout, a breakdown, I should say, which still keeps the door open for it to get saved more easily than if it confirmed. All right. Now, again, it's a little, you really want to see today, especially if Bitcoin's moving, we're seeing some of these other cryptos starting to make moves. You really want to see ETH starting to catch fire. It's a little concerning. It's not, it almost looks like silver, right? And that silver is really struggling while gold was going up. But again, let's monitor and see. If it doesn't confirm, it makes it easier for it to get back above that trend line and push back to the recent highs. If it confirms, that's where you got to really be concerned. So I will keep you guys posted on that. All right, as always, guys, you guys know we try to get some questions in here for you guys. I do have a couple questions from you guys today. When previous recessions happened, the US dollar spiked. Does this mean the spike this time, will it spike if we have a recession? So the short answer is yes, it likely will. But the kicker is this: as the US gets further in debt, the likelihood is that the spike in the dollar will be less of a spike and it will be shorter lived. And that's just a nature of a declining empire, if you will. Any empire in the past, you can go to history. But essentially, reserve currencies, they don't lose reserve status overnight. And so, yes, if the world panics, if a recession hits, the dollar probably does see some money flow. But the key is it's usually shorter and shorter lived, every one, until eventually that currency becomes debased more and more due to debt, due to printing, due to financial instruments like the Federal Reserve, and all of those scenarios. Next question: if the Fed cuts rates, is it a good time to buy TLT? So really, TLT, guys, is something that you want to buy in anticipation of rate cuts. And I want to show you this, guys. Here's your TLT chart. All right. So this is the kicker, right? Look at how TLT has already broken out. So you're already late to the party, right? So again, this is why charts are so important, is because the chart actually told you ahead of time that the breakout was coming. I mean, look at this. Look at this little kind of shoulder, head, shoulder. Now, it's not a true head and shoulders because this shoulder is lower than the head, but still cup and handle pattern, hammering. Look at how many times recently it's hammered on this kind of resistance level. This was a chart that was waiting to break out, and it did break out. By the way, very similar to what I pointed out on this chart of Baidu, which is a Chinese stock. Look at how similar the charts are, right? You have shoulder, head, shoulder, or cup and handle, trend line, boom, look at the breakout. And this is why charting is great, because charts repeat over and over again. It's just a different chart, but the same chart pattern. And this is something we always have to kind of be aware of. All right, so that's a great question right there, guys. And again, I appreciate that question. But short story, or long story short, TLT is a buy on a retrace. But at least for me, I don't chase. All right. Last question: can we look at Pepsi? Is there an inverse head and shoulder forming? Let's look at Pepsi here. Let's go back and take a look. So what we see, I see a potential inverse head and shoulders. All right. So again, just to draw it in real quickly for you guys, this would be a shoulder. This would be your head. It might be forming an inverse head and shoulders here. We haven't formed that shoulder yet, but let's keep it on our radar. Your neckline, again, is going to be somewhere like that. That would be your breakout point. So let's see if that shoulder forms. But what I will say is this, is that defensive names are getting battered down again because everyone's rushing into risky assets like technology. But ultimately, what we know is that when the markets start to struggle, names like Pepsi, Coke, Dr. Pepper, like all of these names, then they should start to perform a lot better. It's just right now, who wants to be in Pepsi when you could be in Oracle, right? I mean, and I'm saying that somewhat facetiously because it's already up so much. You don't want to be chasing up here. But the idea is that Pepsi's not a sexy stock, right? It's not something that everyone's clamoring to get in unless you're really trying to protect yourself going to the future. Once the markets get scary, that's when you'll see something like Pepsi start to move up, which again, if that shoulder forms, it could tell us that it maybe is on the horizon. All right, you guys are awesome. Thank you so much for being members or being followers or subscribers. We appreciate it. Leave questions for me. I'll try to get to 3 a day at least. And let's get into this market and see where it goes today. What a day, what a week, what a month. Take care, guys. Talk to you soon.